Good afternoon. You're watching Midcap Radar here on CNBC-TV18. I'm Hormas Patakia. With me is Vivek Iyer. Vivek, good afternoon. There's absolutely nothing happening on the Nifty after we cooled off from those opening highs. And it does not seem like it's the final expiry of 2024 because the usual volatility that comes with it is missing.
That's right. Certain portion of the volatility has probably been absorbed in the last couple of trading sessions as well. But a flat day, almost nil news day. So not too much happening as far as the markets themselves are concerned. So maybe heading into the last week on a quiet note. But we have quite a lot lined up on the show. Let's start off with the top headlines. Key indices fall from day's high with Nifty below the 23,800 level. Nifty midcap continues to remain in the red, down over 250 points. Realty and metal remain the top losers, while auto stocks see some green.
EPAC Durable surges in trade after reports of China-based Hisense planning to buy 26% stake in the company. That it has clarified that the discussions are in the preliminary stage so far.
J&K Bank rallies after the bank's board appoints Amitabh Chatterjee as the managing director and chief executive officer of the bank for a period of 3 years to be effective from December 30th, 2024.
Seagull India is buzzing in trade after its arm signed a concession agreement with the NHAI for 981 crore rupees. The stock is up almost 3.5%.
Panacea Biotech surges 5% after it gets a letter of award from UNICEF for the supply of 115 million doses of polio vaccines worth 127 crore rupees.
As we just mentioned, it's an absolutely quiet day for the market. The 200-day moving average continuing to be a bit of a resistance line for the index, and it's making lower highs on the charts, right? 23,869 was the high on Monday, 867 on Tuesday. Today's high being around 23,854. So still struggling to cross that 23,850 mark is the Nifty. But the broader markets seem to be doing well for themselves. There is a bit of buying that is coming in. The auto index, the Nifty auto index is up over 1%. PSU banks and the energy index are the only two other indices that are in the green. Most of the other indices are trading below the flat line as we speak, but there are plenty of other movers there in the broader markets, and Vamakshi is joining in to take us through all of those. Vamakshi, good afternoon.
Well, good afternoon, Hormas. Yes, it's a quiet day for the Indian markets, but a lot of stocks roaring in trade today. Let me first pick out the list of all the stocks that are falling in the trading session today. Hindustan Copper is down nearly somewhere around 5 to 6%, and this is the biggest fall that the company has seen in the last 2 months. Cummins India, Finolex Cables, are just some other counters that are down and out in trade today. Chemplast Sanmar is another one that I'd like to point out. The stock is down nearly 3% today, and in fact, the stock has seen the biggest intraday fall today since August 8th. Apart from that, there are a lot of stocks that are gaining momentum in the trading session today. Look at Intellect Design Arena. That stock is up nearly 13% in trade. In fact, the stock is, the jump that we are seeing today is the highest in the last 3 months. Godfrey Phillips has risen the most in the last 2 months. KFin Tech is up most in 12 weeks, and Amber Enterprises, it was up in trade on 24th as well and continues to surge in trade on the back of news surrounding its plans for the IPO of its electronic business. Apart from that, the realty stocks are seeing a bit of a pressure today. Prestige Estates, Brigade Enterprises, Mahindra Lifespace and Phoenix Mills, all of these counters are down and out in trade today. And lastly, let's also focus in on some of the stocks that are moving in trade on the back of strong volumes. We have Rajesh Exports, that stock is somewhere around 4% up. Blue Dart is also up nearly 5%. Newgen Software and New India Assurance are some other counters that are gaining in trade today.
Thank you so much for that, Vamakshi. Some interesting movers from the broader end of the market. Well, moving on, let's now welcome Shivangi Sarda from Motilal Oswal Financial Services for a technical check on the market. Good afternoon, Shivangi. Thank you so much for joining us. First up, what are you making of the markets at current levels? Absolutely flat, the Nifty is today.
Very good afternoon, Vivek and Hormas. Thank you for having me. So we've seen that there has been an absolutely consolidative band in which Nifty has been trading for the last 3 trading sessions, and it's made an inside bar every day. Of course, we've seen that moves have become more narrowed. After the initial hour, we've moved in a range of only 80 points from the last 4 hours, and which clearly indicates that lack of follow-up is there in the market. We're just seeing a little bit of a downtick as we speak right now. But overall, lack of follow-up is clearly missing in this kind of an index, which is making the broader market quite consolidative. So we are looking at 24 24,000 as a crucial hurdle over here, which where call writers are positioning themselves and are strengthening themselves. Even though put call ratio is comfortable, but the India VIX and the other factors are not indicating much of a decisive rally towards both the ends. So 24,000 would be an important resistance to watch out for, and with a support of 23,500 level. So this is a close support, but this will act out for the expiry that we are heading into. Of course, there will be a little bit of a pressure, and we are looking more towards the sell-on bounce for today's perspective. But if you look at a week or the next expiry perspective, there is some sort of volatility and recovery expected. So this is as per the Nifty index. Talking about Bank Nifty, we've seen some sort of underperformance here as well today. Even though the index did cross 51,500, but it failed to hold those levels and it just drifted lower. Thanks to some of the PSU counters, which did show strength but later lacked momentum. So follow-up is clearly missing over here as well. But we're expecting this to remain in a range. Swings will not be ruled out. So definitely we have to fasten our seatbelts ahead of the January series as well. Now, talking about the levels, 50,800 would be an important support to watch out for Bank Nifty, with an upside hurdle towards 51,800.
Right, Shivangi. Shivangi, just as you were speaking, we did see a sudden dip both on the Nifty as well as the Bank Nifty. If you could pull up some of the, heavyweight constituents as far as the Nifty and the Bank Nifty are concerned, have a look at SBI, now near the day's lowest point. Have a look at HDFC Bank, that stock too, at the day's lowest point. Shivangi, on such a volatile trading session, do you have any picks, any buy or sell ideas for the clients?
So banking stocks, I would say, we could wait a little, although rollovers have been slightly lower from the previous, 3 months. And we've seen that there has been less amount of open interest over here. So people are taking a bit of a backseat in Bank Nifty and the banking stocks. So I would actually recommend that we could stay light on this space. However, I have a few picks on radar, which one of them is from the hotel and travel tourism pack, which is Indigo, this entire space is looking quite well, but Indigo has been consolidating from the last 13 trading sessions, and it's come out with good amount of buying interest over here. RSI is showing positive divergence, and we've seen that in the yesterday's session itself, we witnessed 4.5% open interest addition on the long side. So overall, stock looks quite positive, and one could look for buying opportunities here with a target of 48.60 levels and a stop of 45.80 soon. Now, the second pick on my radar is Apollo Tyre. This stock is, consolidating. From the last 4 trading sessions, we've seen supports are shifting higher. And even on the month-on-month basis, we are seeing that the stock is witnessed a good recovery from the lower band. So overall looks quite positive, even though there has been some muted performances from the entire sector, but this stock is standing out quite resilient, and we are expecting this to move towards 565. So recommending a buy here with a support of 530 levels.
All right, Shivangi, thank you for sparing time and joining us with your views on the index and specific stocks as well. Let's now dive into Growth Code, an initiative by Grow and CNBC-TV18, which offers valuable insights and strategies to help you make well-informed investment decisions. This week, CNBC-TV18's Nigel D'Souza interviewed professional trader Manu Bhatia to discuss the recommended minimum capital requirements for beginner traders.
What is the recommended minimum capital amount for beginners with regard to trading?
For equities, the capital amount, I think someone can begin with a capital of 2 lakhs to 4 lakhs, depending on whether they're doing a intraday strategy or a positional strategy on the equities. For someone trading in derivatives, I would say for derivatives intraday, a minimum of 5 to 7 lakhs. And if you're doing positional in the derivatives, having a capital of 10 lakhs is something that should be good from a beginner's point of view. More than the capital, you need to also have the right knowledge in place before you trade something.
Welcome back to Midcap Radar. Well, when you're talking about the broader end of the markets, a couple of stocks today have seen quite a bit of selling pressure emerge. First amongst them being Hindustan Copper. This stock amongst the top laggards as far as the NSE 500 is concerned, now trading near the session's lowest point. The other stock of the day that's seen quite a bit of selling pressure emerge is actually Page Industries. Remember, it's a high-valued stock. The stock is down almost 4% in trade today. But moving on, in 2024, we are putting the spotlight on the cement sector. Remember, this particular sector witnessed consolidation theme. Nigel is here to decode how things are likely to pan out in 2025. Nigel, over to you.
Well, the consolidation theme continued to play out in 2024, with 40 million tons of capacity folding up into the hands of Adani Cement and Ultratech. And over the years, Adani's foray into the cement space with a massive war chest has acted as a catalyst, triggering the race for capacity share, which has increased the competitive intensity. The top 5 players now account for more than 60% of the market. That compares with only around 40% 7 years back. The question is, will consolidation slow down from here on? Remember, the recent deals have been concluded at around $100 per ton mark. That's closer to replacement cost. Well, ICICI Securities says that cement majors like Ambuja as well as Ultratech, they have exhausted most of their cash reserves post the recent acquisitions. They add, except for a few NCLT cases, they believe that low-cost acquisitions are largely behind. And now the potential deals may command a significant premium to the replacement cost. That could make them much more unattractive on borrowed funds at low cement prices. Well, the pain point is elevated competitive intensity has led cement prices plunging to 4-year lows. Demand as well has been plagued by general and state elections, heavy rainfall in few regions of South India, the construction ban in NCR region, and also labor unavailability in various parts of the country. But part of the street is optimistic that cement sector has hit rock bottom and it's ready to fight back. Well, Jeffrey says that dealers suggest that price declines have bottomed out, and now the industry is attempting price increases every month. They believe that the recent increase in industry consolidation further supports a case of revival in cement prices. Though sustainability of the price hikes will depend on what the leaders prefer, volume or price increases. Well, Goldman says that their channel checks suggest that demand is recovering, though on a low base. With the expected pickup in government capex, rural demand is likely to improve, and urban real estate market, well, that's doing well as well. So they expect that cement demand will grow by around 7% in FY26. On the profitability aspect, well, INCRED says that lower fuel cost, improvement in volumes, that could lift EBITDA per ton by around 160 rupees on a sequential basis. Though they admit on a year-on-year basis, it will still be down by around 200 rupees per ton. Axis Capital says that cement spreads are on recovery path. It's at the highest levels we have seen since January 2024. They add that spot spreads are now 12% higher sequentially, though it's still down by close to around 5% on a year-on-year basis. So 2024 has been a brittle one, both on pricing and demand. The hope is that 2025 cement will be in far better shape and it could deliver a far steadier performance.
Well, in fact, earlier in the day, we spoke to Sandeep Ghosh, who's the Managing Director and CEO at Birla Corporation, and let's listen to what he had to say.
The prices have moved up by and large in most regions, except so much in the south. And the increase is modest, though. I would place the increase between 5 to 7 rupees a bag, which is, say, around 150 rupees a ton. So that is there, and I do hope, I do expect it to be, to hold on. And especially things should pick up further in January once both the cold recedes, and then there is also this whole impact in the north of what they call the Malmas. During mid-December to mid-January, there are no new constructions, particularly in the individual home sector, which start. Large players, again, I think instead of exercising pricing power, they will be greatly focused on costs. Especially one of the large players is, focusing a great deal on the supply chain, doing major disruptive, changes, moves in the supply chain because they have, and that is as per their stated policy. So you will see a lot more focus coming in on cost savings rather than taking huge price increases. That's my overall assessment. But certainly, FY26 looks better than what FY25 and FY24 second half was.
Well, some positive commentary coming in there. Birla Corp management expects FY26 to be a better year for the cement industry compared to FY25. But moving on, as we step into 2025, CNBC-TV18 asked some key questions. How will the Nifty perform in 2025? What are the sectors, themes to bet on? Will the faltering GDP growth revive in 2025? Will the RBI start cutting rates in 2025? We will ask the experts for you. Stay tuned for the most comprehensive market poll coming soon on CNBC TV18.
Back with us here on Midcap Radar now, solar cell players have had a stellar run in 2024 with stocks of Premier Energies, Vari Energies and Tata Power rallying up to 170%. And that is largely because India has been in a sweet spot and also on the back of strong demand. Vivek is decoding this rally for us and of course what lies ahead for these players in the year to come.
Well, one particular pocket of the market that did very well in 2024 was the entire solar value chain. Just have a look at some of the companies that are involved in solar cell module manufacturing and see the kind of returns that they've given to the shareholders. Now, this particular stellar rally can be attributed to several key factors. As India continues to push towards ambitious renewable energy targets, there has been a substantial increase in domestic demand for solar products. Remember, the USA too has seen an increasing demand for solar energy solutions as part of its broader clean energy transition. The Inflation Reduction Act, passed in 2022, includes significant incentives for clean energy production, including solar power. Both India as well as the USA are keen on reducing their dependence on Chinese imports, particularly in sectors like solar energy, given the fact that the US has concerns over its supply chain security, intellectual property, as well as its ongoing trade tensions with China. These particular tensions have driven a desire to diversify sources of solar products. India, on the other hand, is positioning itself as an alternative supplier, benefiting from the global desire to avoid over-reliance on China. Both the USA as well as India have implemented policies to curb the influx of cheap Chinese solar products into their market. Remember, players in the India's solar sector are quite optimistic about growth prospects driven by a strong order pipeline as well as expansion plans. Remember, Premier Energy has reported a significant order book worth approximately 4,000 crore rupees. Vari Energy plans to increase its manufacturing capacity from 13 gigawatt to 21 gigawatt by the end of FY27, while Tata Power reported a strong order book of 15,900 crore rupees in its solar EPC business. Its cell as well as module manufacturing capabilities are also being ramped up as far as Tata Power is concerned. Now, talking about the entire solar value chain, remember, China controls 90% of the world's solar module as well as cell manufacturing capacity. This makes China the dominant player as far as the global supply chain is concerned. Solar manufacturers are actively looking for alternate routes to enter the global markets. Remember, pricing as far as solar modules are concerned in China are at a very competitive 9 to 10 cents per watt, owing to the country's massive manufacturing capacity, economies of scale, as well as cost efficiencies. Now, remember, when you're talking about India, the prices are much higher at 16 to 17 cents per watt, and the USA prices are significantly higher at around 25 cents per watt. Remember, when you're talking about ongoing capacity addition, India's largest conglomerate, Reliance, is on track to commission its first tranche of its solar PV manufacturing by the end of FY25. Also plans to scale up its solar manufacturing capacity to 20 gigawatt by CY26. Adani Group too plans to increase solar manufacturing capacity to 10 gigawatt by 2027. Remember, not only them, other players too have evinced interest to set up facility as India's solar manufacturing sector expands rapidly. However, several crucial questions arise concerning the sustainability of current industry dynamics and the challenges that will be posed by increased competition. Remember, India's solar manufacturers, along with their counterparts in the US, are benefiting from a price arbitrage advantage in comparison to global markets, particularly that by China. In markets like the USA, tariffs on Chinese-made solar products have made domestic production more competitive, benefiting the Indian exporters. The Indian government has introduced import duties on solar panels and cells, particularly from China, to protect the domestic manufacturing industry. To promote domestic manufacturing, ALMM is a critical regulatory safeguard that ensures only approved solar manufacturers' products are used in government-supported projects. Analysts, however, are worried about the supply glut in coming years. Will spreads Indian players enjoy be impacted? As the table indicates, when you're talking about valuations, Indian players are actually enjoying a significant premium to global peers both in India as well as China. Remember, some of the listed peers in other markets enjoy larger product portfolios. Some global players also own separate polysilicon as well as ingot as well as wafer facilities. So going into 2025, it will be a cautious stance that analysts will keep as far as the entire solar value chain is concerned.
Vivek, thanks a lot for that. It's been a great year for all of these solar manufacturing companies. But before we call time on midcap radar, just pull up the stock of Red Tape. You just heard you saw a flash at the bottom of your screen just a few minutes ago. The company has announced a bonus issue where it's going to be issuing 3 bonus shares for every 1 share that shareholders have. And it has also declared an interim dividend of 2 rupees a share, and they've fixed the 3rd of January as the record date. The stock gained as much as 5% after that announcement. But with that, it's a wrap on this edition of Midcap Radar. From Vivek, me and the team that put this show together. Thank you so much for watching. MF Corner up next.